Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, we're back here on YouTube to look at Bitcoin. But before we do that, a quick announcement. You may have noticed I put a little post out on YouTube yesterday saying that I'm going to be returning to YouTube soon. Well, in fact, from the middle of next month, I will have 2 whole extra afternoons a week free for me to record video content, and I'm aiming to put out a lot more than just a 1 Bitcoin video a month. I'm looking to put out at least 8 videos a month on YouTube. That's 2 a week for YouTube. I'm hoping to actually produce 3, with the third one being only available for paying patrons. So essentially the short story is the last 2-year hiatus I've been on, I've been at home, stay-at-home dad, full-time parent looking after my young infant son. He's now starting nursery and he's going to be doing 2 full days a week. He's been doing his settling in sessions lately and he's taking to it like a duck to water and absolutely loving it. So I'm very confident I'll have that extra time during the afternoon and I intend to put it to good use. So I want to thank all of you for your patience for the last couple of years, because it has been a while, especially all of my paying patrons. Your support has been greatly appreciated. And on that note, I will be continuing my weekly live streams for the paying patrons. I will also be reintroducing my macroeconomic video review, looking at all the fundamentals of the market. So we'll be covering employment data, inflation data, we'll be looking at the consumer surveys, we'll be looking at unemployment reports, we'll be looking at the ISM report on business, we'll be doing all the macro stuff, and then I'll also be reintroducing my dividend calendar and stock rating system monthly picks video as well to help support my tier 3s. So the patrons will be getting a lot of extra support as well going forward, but here on YouTube you'll be getting 2 videos a week, and I'm going to be covering the US stock market, gold and silver and oil, with the occasional choice stock pick and choice crypto as well. So yeah, it'll be nice to be back. I'm going to work my way back into it gradually, but hopefully I'll pick up the pace and we'll get back to full output in time. And then from later next year, from the end of 2025 onwards, I should gain even more time. So hopefully over the next 12-24 months, the channel will start growing again. We'll get out of this little stagnation that we've been in. But I must say, for those of you who have stayed subscribed and continue to support me, I really do appreciate it. It has been a long time. Greatly appreciate your support, and I look forward to giving you guys some extra content in the future. So without further ado, let's get on with today's video. Right then, so here we go. We're going to start on the BLX, the Bitcoin Liquid Index, and we're going to start here on the weekly time frame looking at the long-term 4-year cycle. So in case you're new to the channel, I know you're probably bored of this if you're not new to the channel, but there's always a chance that we'll pick up some new people. So I'd like to start at the start, so to speak, since it's only been a monthly update lately. As I've just explained, that will soon change. But either way, will it surprise you to know that I'm still bullish? Not really, I hope. I am a bit boring like that. I've been bullish for a very, very long time. This is my 3rd rodeo now, my 3rd Bitcoin cycle. I've been bullish the whole time I've been an owner of Bitcoin. I'm going to continue to be so. And regarding the current cycle, I'm just as bullish as I have been since the lows in 2022, and I see no reason to not continue to be so, putting it simply. So on that note, let's just have a quick recap of where we think we are. So we've got our finish line here, which is the expected peak of October 2025, so roughly this time next year, maybe a little bit later, we should be finding the top of the market. And we've got our expected bottom of around September 2026, roughly a year later. So very simply, this has been calculated using the prior length of the prior bull markets, which we can see here, and the prior bear markets projected forward in time. And all I've done is taken the last 2 bull markets of 1064 days and 1 year long correction, slightly longer in the case of the recent one, but roughly it's basically a year long bear market and a 1060 odd day bull market, and I projected it forward in time. And of course this is not an exact science, it's pretty accurate. The 4-year cycle has been, so we're just going to continue to trust it. I'm not saying it's flawless, it's going to play out perfectly. I'm just saying it's a pretty good guide given what we've witnessed so far. We are, after all, in a very long and very well proven uptrend of higher highs and higher lows over the long term, which has yet to break and hasn't broken once. So there's literally no reason to think that it will, well, until it does. So On that note, we are looking at being somewhere in summer still, with the end of summer and the blow off top in autumn to come, and then we've got our winter to play out, which is our bear market. Let me just adjust that. I must have moved that by mistake. So that's essentially where I think we are in the cycle regarding time. Now if we look at our post halving moves for a moment, because I like to look at these as well, we can see how after each prior halving, so we had the 26th of November 2012, 98.96% of all the gains from during that bull market from the prior low of 2011 all the way through to the high of December 2013, 98.96% of the total price return occurred after the halving. In the following bull market, 97.44% of all returns in that bull market occurred post-halving, and in the one after that, 91.6% of all price returns occurred after the halving. Now, we've yet to move post this halving. Now, this is not particularly unusual. We've had periods of time post-halving before where there's been as long as 190 days before we break out of the previous highs. We're not quite that long in the tooth yet, but we're getting there. So it's been a pretty long wait to get to new all-time highs. I do believe it's coming, and I do believe this post-halving move will play out very similarly to the prior post-halving moves, and most of the bull market from the lows of 2022 through to the expected highs of October 2025, the vast majority of that move will occur after the recent halving. Now, of course, this is all yet to play out. I'm hoping I'm proven right. If we do what we did in the previous cycle and the one before that and the one before that, it will play out that way, and we have every reason to believe that it will. So as you can see, on the long term, I'm still very bullish. So now let's bring in our primary count on the long time frame. So what I think we are looking at currently is we are progressing within a primary wave 3, within cycle wave 3, within super cycle wave 3 on the long time frame. The current count can be broken down in its simplistic form between either a 1-2, 1-2, intermediate and minor degree extension within minor wave 3 of intermediate 3 of primary 3, so on and so forth, or it can be broken down into a 1, 2, 3 and 4 intermediate degree waves, now entering what will be an expected extended fifth as we blow off into the highs. The reason I believe it would be an extended wave if the orange count is correct is we need to clear the previous wave 1 high by such a sufficient amount that when we complete primary wave 3, the primary wave 4 to follow will not transgress upon primary wave 1 price territory. That cannot happen. That is a big no-no in Elliott waves. So given my long-term bullish count, given my expectations for the cycle, post-halving move and everything else, I would expect a very significant price increase. This is why the yellow count of 1-2, 1-2 is still my preferred primary, as it gives us the most room to maneuver and it gives us a whole year before we top. And I just think there's enough time, given how violent these wave 3s are, as we've seen in prior cycles, and how quick they are in time frame. This gives us sufficient time and scope to get to new all-time highs significantly above the prior high of the primary wave 1. So that's essentially the primary count as I see it. Now, before we move into the smaller time frames and have a look at all the more complicated short time frame counts we have available, and there are several we need to consider, let's just touch on the long-term bearish option, as we should always keep an open mind. So the long-term bearish count sees 5 waves completed into the top of November 2021. This would break the 4-year cycle, this would break the post-halving behavior, this would break everything that's been established so far about Bitcoin, and it would now rely upon a expanded flat occurring, since in Bitcoin we did make a new all-time high. Now, this argument has always been a little weak in my opinion, purely because the corrective form and behavior of the prior markets in terms of the depth of their corrections and corrective form, they all come across as sharp corrections with no alternation at the wave 4 as opposed relative to the wave 2, and they all come across extremely deep. This is an 84% correction, 86% correction and 77% correction. These feel much more like wave 2s of various degrees than they do of one complete impulse wave, but that's fine. This is the only way I can really see it counting. to try and get this into the top of a wave after we've had an overlap here is basically impossible in my opinion, without it looking even worse and even less believable. But you do what you want to do, you do you. Now if this is the case, we now are dealing with an expanded flat, and we will come down in an A, which we've done. We've come up in a B, and now we're going 1 2 1 2 1 2 1 2, and collapse will occur within the next few days and we will absolutely implode. I don't think that's particularly likely, to be absolutely honest with you. I won't say it's impossible, I just don't think it's likely. If we were to do this, we would be looking at the zone of around 10,277, essentially between 8.5 grand and 14,000 to be precise, kind of region. I think the 10,000 region makes sense. This is the golden ratio we've got down here. We've also got a major monthly support level here at 13,899. We've also got serious support levels down here as well, and we've got some target fibs based down here on the 1618, 1318, 1236, all in this target box down here. So we've got a lot of potential pullback. We've also got an 89% linear levels right over the 61.8% log retracement. There's a lot of support down here, there's a lot of reasons to stop down here, a lot of confidence down here, right? So if it is bearish, this is likely where we'll stop. Now if we look at some classical analysis while we're here, we can see that all we've really done recently is we've coiled up the 10 over 20 during this consolidatory period. So we've got this move up and a counter trend move back. It's a bull flag. Okay, very typical pattern, and it's a continuation pattern for a bullish move. So we've come back to the 60 weekly exponential moving average, we've trundled along it, we've put a wick through it, we've had a very long wick to the downside, big bullish candle here, we've swung high, we've swung to a higher low, and now we're on our way back to a higher high. That's my expectation anyway. So we've tested the 60 weekly moving average, we brought the average back through the signal line back to the zero bound, basically siphoning off all of the excess momentum we had into the move to the prior highs, giving ourselves a lot of space for a new rally. We've done the same with the RSI on the weekly time frame. No bearish divergence at the top in the long time frame. We've come back to neutral. We've given up all of that momentum and strength that we created on the way into the high. We spent this time consolidating. We've done it so that we can have a real proper nice rally, nice big push back into overbought conditions. We need to have these call-offs if we're going to sustain a longer term rally. Okay, so that's the long-term time frame on the BLX. Now let's come in and have a look at the shorter time frames here. So we have our primary count, and this is looking at a wave 3 extension at minor degree. So let me just remove that out of the way for the moment. Right, so we have a wave 1 at intermediate degree into a wave 2 at intermediate degree into a wave 1 at minor degree into a wave 2 at intermediate degree. This count is invalid if we go back below 49577. We will have to have a rethink. I do have an alternate idea to look at if we do that. We've currently completed a wave 1 and a wave 2 at minute degree, and are now progressing into a wave 3 at minute degree, within wave 3 at minor degree, within wave 3 at intermediate degree, within wave 3 at primary degree, so on and so forth, back 5 or 6 wave degrees. This is the big move that's coming as we approach the end of crypto summer into autumn before we top out this time next year. So we've got all of the work to do. Remember, 90% of the entire bull market occurs post halving, and we've yet to have our move up. So it makes sense that this is 1 2 1 2 3 3 3 3 3 3 3 3, so on and so forth. So you know, this is the primary count. Now this is still in my mind a legitimate interpretation, and will remain the primary unless we come back below 49577. The correction length for the minor wave degree is 144 days. The correction length of the intermediate degree is 150 days. The minor wave degree 2 is smaller than the intermediate wave degree 2, and therefore is a perfectly acceptable extension of 1212. So over the smaller time frame, let's come in and see what we've done here during this correction. So I essentially see this as a ABC into a W, ABC flat into an A, ABC zigzag into a B, and then 5 waves in a C for an X wave as a rather rare running flat pattern. But it does explain the 5-wave impulse, which tricked me, right? This was perfect 1 2 1 2 3 4 3 4 way 5-wave impulse, and it did catch me out. We made new lows, but I was very bullish off of those lows, as you'll remember if you go back and look at the prior video. And this gave us a completed WXY pattern of double zigzag into 49577. We've then come up in 5 waves into a minute wave 1, an A, B, C. Very difficult to count, but honestly, if you're going to count down bearishly, you're going to have the exact same problem as trying to count down to complete a bullish count. So it's just a bit of a mess. So you can count this as WXY, but I really do not like sharp corrections which go to new all-time high, which go to new price extremes, because then they're not sharp corrections. So you shouldn't be presenting it as a double zigzag. You should be presenting it as an expanded flat, which is what I've done here. So it does work, but I've had to force fit a contracting diagonal into the end here to make it work. But we go A, B, C, deep correction, get a strong bullish hammer off of the low, and then we come up into a sub-minuet wave 1 2 into 1 2, and that's as far as I've got so far. It's not like me to really even count down to this level of wave degree, really, because I don't like to spend that much time constantly updating small time frame counts, because you'll just spin your head around 360 degrees and you'll go nowhere. You know, you might as well just back off, give yourself a clear invalidation level, and go enjoy some sunshine before the end of the summer, before the autumn leads into winter, and, you know, actually go and enjoy your life rather than spending it all in front of screens all the time. But either way, that's what I see is going on the primary count. So let's now back out and look at some alternatives. So what if we go lower? What explanation could there be if we go lower? Well, my first alternate count is actually more bullish. Now this is the idea that we've had 1 2 or 1 2 1 2. It doesn't really matter, because we go 3 4 3 4 or just a single 3 4 into intermediate wave 1. So the move into the all-time high was a wave 1. We can therefore complete this as a double zigzag, as we've done in our current count, at wave 2 complete, and now we're progressing into wave 3 for an extremely shallow wave 2. Now I say extremely shallow, it was over 38.2% in linear, didn't quite make it to 50%. Of course it appears a lot more shallow when looking at it in log, but there is an alternative way of looking at this. There's actually 2 alternative ways. So let's just do a super simple idea just to explain this alternate count without all the mess. We've come up into a wave 1. Right, so now we're looking for a wave 2. Okay, as we've just discussed, we're going to be looking at this at intermediate degree. So 1 into 2 at intermediate degree within primary 3. And a logical place for it to stop would be somewhere between the 50 and the golden zone. Right, somewhere down here. Hasn't made it there yet. It could have been done here, which is insanely bullish if that's the case. And wow, we have even only just gotten going. But more likely, we're not done in this scenario. We need to come lower. So we could either look at this as an expanding diagonal if for an A wave. Okay, and we're actually going to have a diag into probably a impulse like that. So we've had our diag A, B, and C, and we'll come down here like that. Okay, so how about we just make it super duper simple, and we'll just say 1 2 3 4 5, and we'll just throw this as the simple alternate. Because I've got so many ideas, it just causes people confusion. I'm trying to keep things simple. So there you go, we could get a deeper correction like that, come down into the 2. There's also the possibility that instead of that correction, we'll get just an extended W, X, Y, X, Z, and we'll look for a triple zigzag, which means we've got this extra leg down. Okay, that could bring us roughly into the same place, so we don't really need to worry about the specificity of how we do it. It just means we go lower, right? So, put it simply, if we break the primary count of 49577, my first alternate idea would be that we've topped out in a wave 1 and we're coming deeper in a wave 2 and we have to come lower. Okay. Second alternate idea is that this is 3 into 4. With this we looked at on the BLX, 1 into 2, 3 into 4. If this is the case, we have all of our work to do in an extended 5th. Now this does still leave the possibility of going lower in that bearish alternate count for a wave 4 back inside the base channel, right? We didn't bounce off the top of it, so maybe we need to come all the way back into it. The invalidation for this is all the way back at 31.035. That's a long 31.035, no spot, sorry. That wouldn't be a very impressive price, would it? So we'd have to come a long way back to invalidate this. And I'm not a big fan of this. I do believe it's possible, but I'm not a big fan of it because it leaves so much work for the wave 5 to do it. It just seems kind of insane. Why would we do all of that in an extended fifth where we can do it within 2 wave 3s at 2 different degrees? It's just so much more normal behaviour in Elliott wave than to do it in an extended fifth. But whatever, it's a possibility. We could already have bottomed, or we need to go lower in this one. Alternate 3, what was that one? Not worth considering, that one. Alright then, so that's how I see it over the shorter term. My count, my primary count, just to recap, is that we've gone 1 into 2, 1 into 2, 1 into 2, and now we're going to go higher. Okay, and that's really all there is to it, guys. There isn't really much more to consider. Oh yes, sorry, there is one more thing, excuse me. The one idea which very few people consider early on in the count. Okay, so we've come off of the low. Let's just come and have a look at this low. Off of August 24th. And we had 3 waves up. Now we can look at it as how we've looked at it. 1, A, B, C into 2. Right, but what if we don't look at it like that? What if we just look at it as 3? Well, surely it has to be corrective then. No, it doesn't have to be corrective. It could be. We've spoken about that here. Well, we'll talk about that last, actually, the bear count, but we spoke about it with the alternate correction of ABCs, WX, Y, X, Z. This could be an ABC into an ABC, down into a completed triple zigzag, right? But it doesn't have to be bearish. 3 waves can be bullish. So we could have ABC into 1, couldn't we? And here's a 1, and here's a 2, and 3, 4, 5. Now what pattern would that be? That would be diagonal, where each wave is made up of zigzags. So I think this often flies under the radar. Diags are not that rare. They're not that common, but they're not that rare. And I think people sometimes forget that we don't need 5 waves in every motive structure. Zigzags are perfectly acceptable. So far we have 1 zigzag into a 2nd zigzag, a 3rd zigzag into the 3, 4th zigzag into 4, 5th zigzag into the 5th. So it could be bullish off of a 3-wave structure. It doesn't have to be bearish. So there's the wild card of the diagonal, okay, out there as well. So let's now have a look at the bearish count on a smaller time frame. We've spoken about this on the long term. So on the shorter term, we've had a let's go out to the 8 hour. Let's turn off the long term count. We had the market top in the cycle wave back in 2021, right? And then we had a move down into an A. We've had an ABC up into a B, and now we're expecting 5 waves down in a C. Now, the only explanation for all of this overlapping price activity from a bearish point of view is that they're all a series of 1s and 2s. So we have a 1 into a 2, 1 into a 2, a 1 into a 2, and a 1 into a 2. This invalidates at 65.103. If we go above that, we then invalidate the minor wave 3 at 70016. And then we invalidate the whole idea at a new all-time high. That's above 73782. If we go above that, we invalidate this whole idea. So we have to turn around pretty sharpish. And we don't just, this count doesn't just elicit a breakdown, it elicits a complete and utter implosion in price. I mean, an absolute massive collapse, which would only take a matter of days to really accelerate through the series of wave 3s. So this would be cataclysmic. So unless there's a black swan waiting out there, I find this highly unlikely, but it is still possible. So that's the bearish count. And that would bring us down into that 10 grand range we've spoken about before, between 10 and 14 grand, okay? And that would be the bearish count. So let's have a quick summing up, because I know I've covered a lot and sometimes it gets a little confusing. So we have our primary count. 1, 2, 1, 2 was complete at 49577. Now 1, 2 again, expected to go higher. If we could fall through 49577, we will adopt the alternate count of this being a wave 1 into a wave 2. We will move the wave 2 position down lower. We will change this 1, 2 here into another zigzag for a WX down into this Y, or a potential diagonal ABC with a leading expanding diagonal into an impulse, and that's what we'll be expecting. But either way, we will expect deeper pricing. Okay, so if we break that level on the primary count that we were just discussing of 49577. We will adopt the idea of this the top being a 1 and this coming back into a deeper 2. Maybe a sharp thrust down like we saw during COVID in 2020 in the March. So we might get that sudden race down. If, however, that's the two options. The second alternate is just to back up the idea that we get an extended 5th. This will really be determined down how we go up and the structure we form on the way up. We won't really know it was an extended 5th until it's almost done, and by that time we should be walking on the moon. So we'll have to wait and see. But either way, they're your bullish counts. We then have a wild card which fits into any of these, because it could be a leading 1 into 2 as a leading contracting diagonal within a 5th of a 1 of a 5, or it could be the 1 2 of the wave 3 that we're just entering on the primary. So this could be a diagonal, and that's why we've had a zigzag. So we'll keep this in the back pocket as well and see what happens. And if none of that works out, then there's the bearish count. If we absolutely fucking implode in the next week or so and just fall off the face of the earth, this is the best explanation for it. Alright then guys, and that is the best I've got for you. I don't think we need to really worry about anything else in the meantime. The lows we formed back in August looked very strong. I said so at the time, they looked very strong. I've been bullish the whole time. I see no reason not to be. If we break 49577, we can come back and produce another video and have a chat about it. But in the meantime, we are just still going sideways. We're in a big bull flag looking to break out to the upside. Right then guys, thank you very much for joining me, and if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you are interested in what you've seen, there's a link to the Patreon in the description below. Feel free to sign up. As I said, we'll be increasing the content from the middle of October onwards, as we are also going to be increasing the content here on YouTube as well. So thank you so much once again for your patience over the last couple of years. I know it's been a bit of a dry spell, but we will be correcting that going into the future. So take care of yourselves. All the best, and I'll see you guys soon. Take care.